Hello everyone. Before starting, let's have a question here. Short sale, as I told you, Tanya, it's not nothing but when we are selling something in advance. So let me share my charts with you today. Okay. So what you see over here is that on yesterday, the price of the Ethereum fell, right? The price of the Ethereum fell. So if you know at the end, on the beginning of the day, let's say you know over here that the price of the Ethereum is going to go down today and you have no Ethereum. Okay. You have no holding coins by now. When you know that such a move will be coming into the market, what you can do is that take some coins from your broker. So you'll ask your broker, okay, to short sell. For example, you will owe some, let's say I took around 10 Ethereum from my broker. Okay, I sold them over this price level. So I sold them at this price level, which is 1589.141. Okay, so I sold the same on the $1589. So this is the chart in USDT. And then I bought the same on the 1505 dollars or 1500, let's say for easiness, let's say 1500 level. Now what I'm doing over here is I'm selling in advance. Okay, when I'm selling in advance, what you are seeing that over here at this time period, let's say 25th July 6 a.m. Okay, I do not have any coins with me. I do not have any Ethereum coins held with me. What I'm going to do is to take some coins from my broker in advance and I'll sell them. I'll sell them. Then what will happen that the price will start decreasing, right? And from this price of $1589 till 1500, if I sold one Ethereum, I had made $89, right? Because I sold at 1589 level and I bought them back at 1500. Now once I buy them back, I have to return that Ethereum to my broker. Okay, and this is known as a short sell. Hope you have understood this transaction over here. How am I doing this short selling? We are going to understand this whole price analysis and technical analysis in detail from now. So your major thing is that your basic understanding should be clear. Till now, we have done what? We have understood the formation of the candle. We have understood like these red candles represent what? These red candles represent that the price is decreasing for the day. So if I'll move to the daily chart, what you will see is that yesterday's candle, okay, if I'll go to the latest candle, can you see that this day's candle was red? This day's candle is red. That means what? That the price has decreased from this level to this level, right? Similarly, if I'm looking at this day on 18th of July, there is a representation of what? Green candle. That means that the price increased on this day. Are you trying to understand what I'm trying to tell you over here? How this green candle and red candle is showing whether the price is increasing or decreasing? Okay. So till now, what we have understood is that the formation of the candle, how the candles are being formed and how we can interpret the candles. Now we are going towards the understanding of how we can trade from these candles. How do we know in advance this price is going to be, going to low, or this price is going to go increase in the future? So we are going in that analysis. How do I decide? How do I decide whether to buy or sell? So last day we understood the candlestick chart. So if there is a daily candle of red, let's say over this candle. So what you will see at the formation of the candle that the price started open over here, right? The price opened at this level. Once the price opened at this level, the price, tried to go above side with the wick. So I told you the higher wicks are showing you what? The higher wicks are showing you that where the price have increased or went to this highest level. Then the price started going downside and till here, right? Till here, it made a low. But then at its low, what you will see at its low, the buyers kick in again. Okay, the buyers started, coming in the market and started buying this thing again and close the price at this level. Okay, so if it is a red candle, that means that the price for the same day has decreased. However, the momentum, how much the price has decreased or it has decreased for the whole day or not, is represented within this candle. So moving on to the next slide, we are trying to understand the candlestick patterns that will be helpful for us. See, I told you in the last section as well, in the last session, that we are going to learn the price action. Okay, and for understanding the price action, you have to understand that this price action is based upon the candlesticks. The candlesticks is nothing but the alphabet of the language price action. Okay, because when we are analyzing the charts technically, it is very important to understand the first alphabet. If you are trying to frame a word in English or we are trying to frame sentences in English, that we need to understand the alphabets A to Z. Right. So now we are studying what? We are studying the candlestick pattern so that we know in the future how the price will dictate itself in the future. Okay, so let's go through it once. And if you have still some, understanding problems, then we will take up the questions. So these patterns, these candlestick patterns are far more important to understand the behavior of the market as a whole. So when you're understanding the market as a whole, it is very important for you to understand the candlestick patterns. Okay, just think like the way that you can infer the attitude of the whole market, that is millions of traders via just single candle. So when we see that in the whole day, okay, in a whole day, there was a formation of a red candle. What can I tell about the market? Can I say that the price decreased on this, on this particular day? Yes or no? The price decreased on this day? Yes. understand, if there is a red candle of the whole day, can I not say that there were millions of traders and investors who actually sold in huge quantities, and that is why the price went down, right? So basically, candlesticks is giving us the importance, giving us the understanding of how the price is going to dictate in the future. So candlestick is itself telling us a lot of things. Okay, we will be thinking about the candlestick, we will be learning about the formation of the candlesticks and the meaning of the candlesticks. A single candlestick even is able to tell me a lot of things. But now, if the candlestick is showing a form, is forming a pattern, or is showing me a pattern formation, it's like an ice on the cake. It forecasts the ever-changing mood of the market players and hence land you to the profit zone. And vice versa also. That if you do not understand this pattern formation, if you do not understand the attitude of the buyers or sellers within that candle, then also you're going to make some losses in the market. So first thing we have to understand is the formation of the one candle pattern, which is the hammer pattern. Now, what you will see over this pattern, see, normal candles are in a normal shape. But what about the candles which are having a huge wick like this? So what is the difference between a normal candle and this candle is that you will see that the size of the wick, size of the lower wick is very huge, right? Size of the lower wick is very huge. Now, understand what I'm going to tell you in these words. It is very important to analyze this candle. It is because it is a very, very important indicator, and it is also very important trigger where the price is going to reverse. See, understand this thing, when the price is increasing, right? When the price is increasing, what do? We buy, yes or no, right? But if we are buying, isn't it our expectation that we buy from the lowest? Because if we are going to buy from the lowest price possible, only then we are going to make huge profits, right? So when we are buying it, so we want that the price should give us some indication at the lowest price level. That's if the price was decreasing in a very, from a few times that it was decreasing. But then there was a, formation of such a candle. And this is a one such, you can say, indication that the price is going to reverse. Now, why is that? Understand this thing. In a single pattern, when there is an upper wick and there is a lower wick. On this wick, this is known as the seller dominated area. These price level, okay, let's say the price started at 100, it went up to 120, then it started going down till 80 and closed at 90. So it will be a formation of red candle, right? In this red candle, this upper wick, because the price, drop down so fast from this level, this is known as the seller dominated area. Okay, similarly, if you are talking about the lower wick, it is known as the buyer dominated area. So when we are looking at the lower wicks, we are looking at what? Buyer dominated area. And when we are looking at the upper wicks, we are looking at the seller dominated area. Now, if you will see in this candle, can I say there is a huge buyer dominated area? Can I see how the buyers are still dominating at this level, at this price level? And that is why there is a huge, or I can say there is an increase in the size of the wick rather than the body. Okay, so if such a candle is forming, that means the buyers are showing their domination in the market. The buyers are showing the domination in the market. And when the buyers are showing domination in the market, that mostly means that the price is going to increase from this point as well, because the buyers are trying to dominate the market. So coming on to the next is a doji candle. Now, what you will see over here is that these are such the candles which are doji candles. Okay, so doji is nothing but an indecision candle. What you will see over here in these candles is that the candlesticks is not having any body. It doesn't have any body over here. Okay, in a normal candlestick, there is a body. So in the normal candlestick, this is known as the seller dominated area. The seller dominated area. This is known as what? The buyer dominated area, right? But in this candle, the body, what does the body represent? Can anyone tell me what does the body represent? See, we understood that the upper wick is showing me the seller dominating area. The buyer is showing me, the lower wick is showing me the buyer dominating area. But what does the body in a candle is showing? Yes, the strength. Okay, the strength, or I can say the confidence of buyers and sellers. The confidence of buyers and sellers. That means if there is a huge candle, if there is a huge red candle like this, then I can say that the sellers are very confident that the prices will be going down in the future. Okay, similarly, if there is a huge green candle, I can say that the buyers are very much confident that the price is going to go increase in the coming future. But then comes a point where there is nobody. Now understand this thing. That means this no body candle is showing me that buyers or sellers are not confident. And that is why I can say that this is an indecision candle. This is an indecision candle and suggests confusion and the possible reversal. Now you understood what is the doji representing and why is it representing such? Because there is no body, because you will see that in such candles there is no body. That means the buyers and sellers are not confident, and that is why it suggests what? Confusion in the market. If there is a formation of the doji, that means buyers and sellers are not still ready to actually decide whether to take the price downside or to take the price upside. And that is why what you need to see is that there is a possible reversal sign. So understand the application. When the price is coming down from a long period, there is a formation of a doji over here. There is a formation of a doji at this price level. That means this shows that the confidence of sellers, obviously when the price is coming down, there will be huge red candles, right? There will be huge red candles, and these red candles are showing me the increased confidence of sellers that the prices will start going down, will keep going down. But once a doji is formed, once there is a formation of a doji candle, that means the buyers and sellers are not now confident. The sellers have lost their confidence, and the buyers are still not confident whether the market will increase or not, right? So this is why it is known as a indecision candle, or it suggests confusion. And it also suggests what? A reversal. The possible reversal is suggested from here, that the price will start increasing in the coming future, and the doji is a formation that removes this confusion. So the next candle will do what? This next candle will actually remove the confusion. Okay, this next candle will actually remove this confusion, and after that only we will be able to know whether the market is trying to go upside or whether it is trying to continue the trade towards downside. Okay, so understand how we will be using this. The way we will be using dojis is to wait for the next candle. If the price is showing a red candle after this, if the price is showing the red candle after this, after doji, what do you think the market price will go, down or up? It is showing me that the price is trying to go downside. But after doji, after the formation of the doji, there is a formation of a big green candle. There's a formation of big green candle. So what you would think that the price will go? Where do you think the price is trying to go? Upside. Okay, so now you're understanding what? Now you're understanding the presentation of the market in the technical analysis, and that is how we take decisions based on such candlesticks. Coming on to the next is that two candle pattern. Now we have understood what? The one candle pattern. So let's say there is a formation of this candle. So this is showing me what? The buyers dominating area. That means there is a possible, there is a possible price level towards upside. Okay, understood with this? Yes. Now tell me, if there is a candle like this, if there is a candle like this is showing me like this. So tell me where the price is trying to go, towards a downside or towards upside? Towards a downside. Why? Because the sellers are showing their domination with the help of a upper wick. So if you will see the, the length of the upper wick, it is very huge. Okay, and that is why it is also known as the hammer pattern. So hammer pattern is like either it will show their domination towards the upside or towards the downside, and we can expect that the price will start going down or up from there. Okay, now coming on to the two candlestick pattern is the bullish engulfing. So now what is happening over here? Okay, if you will see that it is very, very important, and it is one of the entry trigger. It is also known as the entry trigger in our theory. Okay, why it is an entry trigger and what is known as the entry trigger? Let's understand this. Now, when I say price was coming down from a longer period of time, and what you will see over here, that there is a huge, green candle formed after just after the red candle. There's a formation of a huge green candle just after the red candle. So what is it showing? That now the buyers are trying to take over the market. Okay, so when the buyers are trying to take over the market, that means this is a very, very possible reversal sign that the price will start going where? It is supposed to go towards the upside, and that is why it is one of the best entry triggers. What is known as the entry trigger? Let's say we have done an analysis. So when we are done with the analysis that the price is trying to go upside or downside, there is a movement like this. When the price is moving like this, and there is a formation of what? There is a formation of a engulfing candle. When there is a formation of engulfing candle, that means we are going to enter our trade from above this level. Okay, because this is a possible what? Possible bullish sign. Okay, this is a possible bullish sign, and the price will start going towards the upside. Similar is a pattern known as the bearish engulfing pattern. So over here, what you will see that the price was coming upside to from a very long time, and then what you will see that there's a formation of a very big red candle just after small green candle. So in this structure, in this whole structure, what you can see that the sellers are trying to take over the market. Okay, the sellers are trying to take over the market. So now if there is a formation such like this, what you can understand where the price of the direction will be, towards the upside or towards the downside. So the price is trying to go towards the downside. Why? Because the structure is saying that the sellers have showing their confidence because of the huge body. Because of the huge body, the sellers are showing their confidence and they will try to take the market towards the downside. And that is why it is also our entry trigger, one of the best entry trigger for what? Shorting. So if we are going to short, it is one of the best entry trigger to short from below the engulfing candle. Okay, next is known as the bullish Harami. So this is another two candle formation pattern, which is known as the bullish Harami. So this is over where you will see that the price was coming down from a longer period of time, and then what you will see. This is a pattern where you'll see that there was a smaller green candle. This is a small green candle against what? Against the red candle. Okay, against a red candle. Now, what is the conjecture over here? That once the prices, the prices are actually coming down from a longer period of time, this is the first point. This is the first point that the buyers have shown their interest in the market. So when the buyers are showing interest in the market, why are the buyers coming in the market? Obviously to buy, yes or no? They're coming into the market because they want to do what? Buying. And once we understand that their buyers are showing their interest in the market, when such formation is there, we are going to do what? We are going to trade towards the upside. That means we are going to long in our position. Similar is the pattern known as the bearish Harami pattern. What is it saying? That the price was coming upside from a longer period of time. There were formations of green candle again and again. And then there was a formation of some small red candle against what? A big green candle. Now understand, from this price level, this is showing that the sellers are showing their interest in the market. Okay, if the sellers are showing interest in the market, why will the seller ever come into market? Obviously to sell, right? Obviously to sell in the market. And that is why we can expect that the prices will be start coming downwards from this pattern. Now, coming on to the what? 3 candlestick patterns. See, this is not a pattern, but this is a model that shows the market is basically trying to go upside. So if you will see in this candlestick pattern that the price was coming downwards. Okay, the price was coming downwards from a longer period of time. Then there was a formation of, first of all, if you will see that there is a formation of what? There is a formation of bullish Harami. Okay, there is a formation of bullish Harami, and then you will see that there are large green candles coming into the market. Now, these candles will actually show you the huge confidence of buyers. Okay, these candles will actually show you huge confidence of buyers. And because, why will these candles will be formed? Because buyers have introduced huge capital in the market. Yes or no? Why such candles will be formed in the market? Only and only when buyers have actually introduced or they have bought in huge quantities. So they will act as a wall. They will act as a wall against dropping the price. They will also act as a wall against the dropping of the price. And if you see such pattern, if you see that there are some bullish candles like these, there is a higher chance of probability that the price is trying to go upside. See, understand people, when you're investing or when you're trading, okay, you are trading or you're putting your money or betting your money on probabilistic situations. Okay, on probabilistic situations. You do not know in future what is going to happen. Nobody knows. Okay, no participant of the market knows what is going to happen in the future. Right? But when you're betting your money, when you're trading or when you're investing your money in the market, what you will see is that you are going to trade or you are going to invest on the highest probability situations. Okay, right? Where there is a more than 70% chance of winning. Understood? So when you're actually investing or trading your money, that means you're betting your money on some probabilistic situations. It is not 100% rule that yes, the price cannot reverse from here. The price cannot go down from here. The price can go down from here. It is not a hard and fast rules. Whatever we are understanding, these are not hard and fast rules, but we are understanding where is the highest probability line. Okay, we are actually understanding where is the highest probability situation where you can actually bet your money. Understood? So when you are actually trading or investing, you want to put your money into those opportunities where you are much more confident, or the price is showing you, these candlesticks are showing you, yes, this is a good opportunity to sell, or yes, this is a good opportunity to buy. If you will see over here that there is an engulfing candle over here as well. Right, there is an engulfing candle over here. So it is not a hard and fast rule that these rules will work 100% of the times. Understand the risk component as well. I'm not telling you that no, that the price cannot move from here. Yes, the price can move from downside over here as well. But once you understand where to enter, where to put your stop loss, how to target, on which price interest you are going to buy this or not. If this is your price interest of price or not, we are going to understand a lot of things in the same strategy in the in this session and the coming sessions, that you will have a clear understanding when to use these patterns and when not to use these patterns. Okay, but whenever we are putting up money, we are going to put up our money in the maximum probability situations, the major probability situations. This is a very rare chance that when a bullish engulfing is not behaving the way it should. There is a very low probability. Only 90% of the times the price started going upside. Only 10% of the times, there are rarest of the rare cases that the price might go down. And that is why we will also learn the principles of the risk management. But what you are understanding over here will work more than 90% of the times. Okay, so when you are saying that you have seen 3 advancing white soldiers, that means the buyers are actually coming into the market. They're pumping the market to the bullish sentiment. There is a huge bullish sentiment in the market, right? And on the basis of these triggers only, you are able to take your entries. If you will see, this is also engulfing candle. Okay, if you will see, this is also an engulfing candle. Can everybody see that? So we are going to understand when to use such patterns in the coming things. Okay, in the coming slide, we are also understanding when to use these patterns. We are not going to use these patterns every time over here. We are not going to use it over here. Why? We will understand in the coming slides. But once we are having a conjecture, we are having a bias. Okay, a majority of the bias is saying that the market is going to go upside, and then such things, you are able to see such things. That means it is a very good trigger in the market. Okay, so let's move on to the I'll give you the glance of a real chart, and we will see whether these things work on or not. Can everyone see that this is a bearish engulfing candle? Yes or no? Can I also see that there are so many wicks on the upside? That means this is what? This is a seller dominated area. This is a seller dominated area, and the price is telling me what? That there is a bearish engulfing candle. If after looking at this, if I had traded till today, okay, if I'm trading today, will I be wrong to sell? Will I be wrong to sell today? Tell me, everyone. Will I be wrong to sell? No, I'll be right to sell. Because why? The price has shown me a bearish momentum. It has shown me a bearish movement in the price levels. Okay, so once you're able to understand the concepts behind all of this, then you will be able to make some consistent profits in the market. So take any reversal point. Okay, you will see such things. Let's say over here, can you see that there is a formation of what? Bearish engulfing again, right? At this point of period, at this point of time, again bearish engulfing, yes or no? Right? And this point, can anyone tell me which is this pattern? Come on, everyone, tell me which is this pattern? The bearish Harami pattern, or it is in English is also known as the inside out pattern. Okay, it is also known as the inside out pattern. So these things you will see regularly in the market, and then you will be able to actually sell from these levels, taking up your stop loss like this and taking profits of 1:2. That means if you are putting $100 of stop loss, or if you're putting up 10,000 or 1,000 rupees of stop loss, you are making 2,000 rupees in the market. And we are going to use such things again and again. Why? Because these things are available in the market again and again. What you will see over here, first, when the price was coming down, can I see that there was a huge wick from the downside? Can I see that there was a huge wick from the downside? That means this is a buyer dominated area. Can everyone see that? This is a buyer dominated area. And then afterwards, what? The price started going downside. Then again, there was a pattern of, first there was a pattern of bullish Harami, and then there was a pattern of bullish engulfing. Okay, if you will see that the price is actually showing me a bullish engulfing. So with using such understanding, with using such things, only then I'm able to make profits on a regular basis. Every reversal will show you a candlestick pattern. See, when the prices started coming down, can I see a bearish Harami pattern over here in these two candles? Everyone, in every reversal, like every point of my period of time, you will be seeing such patterns again and again. What you will see over here is again a bullish Harami pattern. There was coming a sellers, and then there was a small green candle within that candle. Okay, so this is what? A bullish Harami pattern, and the price started going upside again. Any point of time, is it not a bullish engulfing candle? Can anyone tell me? Is it not a bullish engulfing pattern? So will you be not correct in buying over here? Right? So understand that when you are understanding these things, understand it with the proper conceptual clarity, so that you are able to use in the market. And when you are using this thing in the market, you should be making profits on a regular basis. So going on to the next pattern is the 3 black crows. So it is nothing but you will see a major bearish sentiment. You will see what? A major bearish sentiment. So when there is a formation of huge red candles again and again, okay, 3 huge red candles, that means that even if the price was coming upside from a long period of time, you will see that the sellers have created a wall. Sellers have created a wall, and this wall is going to sustain the prices at down levels. So you will be very much sure that yes, this is a pattern. This is something that the market is trying to show me, that the sellers are coming in huge quantities. They are forming a selling wall, and I should be selling below these levels only. I should not be buying, because if you would have bought at this level, let's say you have no knowledge of it and you have bought looking at this candle, would you have make a profit or would you have made a loss? If after the if you do not understand the formation of such candles and you're buying from this level, looking at these candles, you started buying, will you be making a profit or a loss? Come on, everyone tell me. You will start making losses. And that is why you need to have understanding of these candles as they are. If after looking at such a green candle, can I dare to sell? No. So you are now understanding how we are going to use these candles along with the practical applications. Okay. Understood with these all patterns? Do you have any questions? Because we are going to move forward to the next topic. We could have bought because it's at the same level after huge green candle. Also, the coin is retraced 50 to 68%. I'm not getting your question properly, but you have to understand the market as a whole. You cannot just I told you, you cannot just decide on one thing. Okay, we will be seeing how we will be actually making this trading decision on more and more analysis. We are not just going to use these patterns only. We are going to use more than this thing, so that you have a higher probability of buying or selling. Now, coming on to the very major topic and very important topic for today is the support and resistance. See, understand this is a very, very important thing, because most of your analysis will be based on support and resistance. Now, what is support and what is resistance? The concepts of trading level supports and resistance are undoubtedly two of the most highly discussed attributes of the technical analysis. Part of the technical analysis chart patterns, or any pattern which you use in the technical analysis, support and resistance are used by the traders to refer the price levels on the chart that tend to act as barriers, preventing the price of an asset from getting pushed in a certain direction. So what you will see over here in the chart, okay, what you will see over in the chart, that after price was going above this level, this is the first price level that the price was not able to breach above side. So if you will see that after 590 or 600 level, okay, let's say it's a 600 level for clarity, can you see how the price touched this level and started going downside? So that means this 600 price level is acting as a resistance, okay, is acting as a resistance, that the price is not able to go above side. And what you will see even in the continuing future, can you see, tell me whether the price actually went above side or went below from this level? No, it was not. The price stayed below at this level, right? So these are the support and resistance are the very important two levels which you need to focus on, and you need to understand and grasp the meaning. Now understand, when the price was coming downside, what does it make? It made a support. It made a support level, and the price started going upside. Okay, it stayed below the resistance level. The price started going again downside, but the buyers did not let it. So can I say that support are the point of interest of the price level where buyers are present in huge quantities? Tell me, is the support the area where the buyers are present in huge quantities? Similarly, resistance is the area where the sellers are present in huge quantities. Okay, sellers are present in the huge quantities, and that is why, see, nobody wants to take a loss. Over here, the people who have bought, okay, the people have buy or long positions over here. If the price will go below this level, will they start making losses? Will they start making losses if some buyers have actually bought up from this level and the price will go down from this level? They will start making losses, right? And if the persons who have actually sold from these levels, who have actually sold or shorted from these levels, if the price will breach above this level and will go upside, will the sellers make losses? Yes. And that is why when we are understanding the market as a whole, we need to understand which is a strong support, okay, which is a strong support or which is a strong resistance. So one more thing that you need to understand from here, if the price has to go upside, can I say that it has to beat the resistance? If the price has to go up above side, can I say that it has to beat resistance? Yes or no? Yes. And that means the sellers will start losing their money. Similarly, if the price has to go downwards, can I say that they have to break the support? Yes. So that means the buyers will start losing money when the price will go on the down direction. Yes. And that is why you need to understand in the market whether the price is trying to beat the sellers or is it trying to beat the buyers. Because if it is trying to beat the sellers, that means my bullish momentum will continue upside. If it is trying to beat the sellers, if it is beating the sellers, if it is beating the resistance again and again, that means what? That means that the price is beating up the sellers and the sellers are hitting their losses. So sellers are losing over here. Similarly, when the price has started going downside, can you see how the price has beaten up this support level? Okay, so when the price is beating the support levels, that means the price is beating the buyers. And when the price is beating the buyers, the price will push towards the downside. Understood the conjunction? So moving on to the next slide. Trading purpose. Now we are actually entering into the practical concepts of trading. How we are going to trade? So before going to the trading thing, we have to understand what is our purpose for the trading. You always have to follow the trend. Okay, as a normal saying, trend is your best friend. If the trend is towards the upside, what am I going to do? Am I going to buy or am I going to sell? Similarly, if the trend is downside, will I buy? No. Okay, I will start selling. The main purpose is to buy low and sell high, because only after you are buying at lower prices and selling at higher prices, only after that difference is going to be what? Your profit, right? But what happens if you sell low and buy high? It will be making losses because you are selling at lower prices. You are selling at lower prices and you are buying at higher prices. So let's say I bought a cryptocurrency at 200 rupees. Okay, and I sold the cryptocurrency at 200 rupees and I bought it again at 210. Will I make a profit or will I make a loss? Okay, why there will be profit? I am selling at 200 and I'm buying it back again at 210. That means I am going to suffer some losses. Okay, so your main purpose of trading is to buy low and sell high. And these are the opportunities that you have to find in the market. When is the price is trending towards a higher side or towards a lower side? If the price is trending towards the higher side, let's say the price is trending towards the higher side, your major purpose is to buy over at these levels when the price is making a low. Okay, when the price is making a low, and you have to sell when the prices are going at a higher levels. One of the major thing is the price doesn't move in straight lines. So when you look at my charts, when you've seen the real charts, can you see that the prices always move in swings? Have you ever seen the price made like this? No, the price is doesn't move, will actually never move in straight lines. Neither they are going to make a lot of distractions. The price moves in a flow, which is known as a trend, or you can say swings. Okay, the price is always moving in swings. Even if it has to go high, it will always make a higher highs and higher lows, which we are going to understand in the coming slides. And when the price is actually going downside, it will be making down swings. And when the price is going higher, it will be making higher swings or upside swings. Okay, you should always take up your trade alongside the trend. That means if the trend is higher, you have to buy. That is to buy when the prices are going upside and the sell when the prices are going down. So let's move on to this real charts and try to understand this topic. So you will see over here, when the price is making a higher highs and higher lows, that means we are going to understand how the price is making. But what you will see over here, when the price is going high side, okay, understand when the price is going higher side, can you see how the price is making swings? Right? It never moves in a single line or in a straight line. Similarly, when the price is actually going downside, so let's take a down example, even over here. So see, when the price started going downside from over here, when the price was going down, it was making swings. Similarly, when it started moving up back again, then it was making swings. Understood? So major conjecture that you have to understand, major thing that you have to understand from here, that the price will always move in swings. The price will never move in a straight line. And that is why it is a little bit hard to capture the movements in these swings. These swings will be your best friend as well as your best enemy. Why? Because obviously, see, understand when the price is going straight like this, will I buy or will I sell? You are going to buy. If you can see that, majority of the market participants can see that you have to buy and buy again. Right? And that is why everyone will start making profits, which is against the nature of the price or against the nature of the markets. And that is why to eradicate such easy things, the price will always go in swings like this, which you can see over here. Can you see how the price is making swings towards the upside? And if I connect a trend line, if I connect these all the things, this is known as a trend line, which is telling me that the price is going towards the upside. Okay, so your major purpose is to catch these swings. Only when you will buy at this low and will sell at this high, you are going to make profits. You are going to make what? You are going to make profits when you are doing such things. If you are going to buy at this level and selling at this level, will you make a profit or will you make a loss? When you are buying at this level and you're selling at this level, will you make a profit or loss? You will be making losses. And that is why we need to understand the nature of these swings, nature of the price with the help of these swings. Now we have understood the trading purpose. Now we have understood how the candlesticks talk to us. We have understood how these candlestick patterns will tell us where the market is going, how the market is going, and where to buy and where to sell from. In the next session, we are going to understand the exact strategy, how to accumulate. So whatever we have learned till yet in all these sessions, we are going to put these things in the practical way. We are going to understand the price movements in the real chart. So I'm going to discuss the real charts with you and where to buy and how to buy or where to sell and from where to buy again. In the next session, I'm going to discuss the exact strategy. And this strategy, I'm telling you, when you will practice it by yourself. Okay, I will not be telling the results of the strategy. You will be the one who is going to tell me the exact result of that strategy, whether you are able to make profits or whether you are able to make losses from that strategy. So when we are going to discuss in the next class is very, very important. Okay, it is of utter thing that how to analyze the markets as whole. So when we are analyzing the markets in the total direction, okay, so let's go to the real charts again. So when we are going to accumulate our concepts, whatever we have learned till yet, and we are going to apply this in the same market, how we will be knowing in advance that the price will move in the upside direction over here, how we will be knowing to advance that we are going to buy from this level only and not from this level. So we are going to learn how to buy at these levels and sell at these levels. Okay, so we will be understanding this whole thing. We will be going to discuss each and everything regarding this strategy, and then we'll be applying all the concepts that we have learned till yet, all the candlestick patterns that we have learned till yet, how this thing is going to work. We are going to make also watch list, okay, which is pending. I told you that we will be making a watch list so that you can people add your watch list. So if you will see that I have my watch list over here, like Nifty 50, I have made the Nifty 50 watch list like this. Okay, I also trade banks as well. Let me show you my yesterday's trade for M&M. So yesterday I took a trade in Mahindra and Mahindra. Okay, and I sold at this level, exactly at this level. So now see, understood how I take this M&M trade yesterday. So this was a major support level. What you will see that from a various days, the price was trying to test the support level again and again. And yesterday onward, what did the price do? The price first break this support. Okay, in the first session, that is before 12:30, the price made a low and broke this swing. Okay, the price broke this swing. With the help of the swings, the price broke the support level. I entered from this level and sold it and captured all of this profit. Okay, I closed my trade after the end of the day, around 2 to 15 p.m. Okay, so this is how I caught this whole swing and made around, I think, 1:5 RR in this thing. Okay, because I sold exactly from this level because I know that this was a major support level that the price was making. And once the price broke this level, the price made a retracement. I know that the price will make a retracement little back. And so we did what? So with the help of the candlestick pattern. So let me show you the candlestick pattern that I use over here. Okay. Now you will be telling me which candlestick pattern did I use yesterday. Tell me if I wanted to sell. Tell me if I wanted to sell, which candlestick pattern did I use yesterday? This candlestick pattern I used to sell. It was a bearish engulfing pattern. Okay, so in the next class, we are going to understand, we are going to amalgamate all these things. We are going to understand how to take these trades, how to grab these opportunities. So yesterday, I took this trade around 1:5 RR. I put up my entry like this, below this engulfing candle. Okay, putting up my stop loss like this and taking a trade for till the time the price was, because the price was in a huge bearish momentum. Okay, even if I wanted to cut off my trade, I was not able to because there was a huge bearish momentum over here, and I cut my trade around 2:15, or I think, yeah, I cut my trade around 2:50. So this was my exit point, and you will see the RR, it was around 3.74. I put up my stop loss, I decreased my stop loss afterwards, and it made around 1:5 RR. So my stop loss was around, I think, 3 or 4,000 rupees stop loss, and it made around 20,000 rupees in just one trade. Okay, same things we are going to use in the crypto market. So this is not something which is not happening in the crypto market. If you will see in the trio markets thing, let me go to the Litecoin or the Ethereum chart. So you will see such things happening over and over again. Okay, happening over and over again. So you will see over here what was my conjecture when I'm taking today's trade. So what you will see over here, that the price was making good support level at this level. The price was actually trying to suit this, break this support level again and again. Okay. After breaking this support level, I waited for what? Retracement. So it never gave me an entry. Can you see any candlestick pattern which you have actually sold from these levels? So if you will see in this whole swing, okay, there was no single candlestick pattern which was actually telling me where should I sell again from. So I waited for what? I waited for again support to be broken. So this was my major support again. And after the break of this support, what I have seen is this kind. Okay, with this bearish engulfing candle, this is also bearish engulfing candle, you will see that the market actually went down a lot. Okay, so we are going to amalgamate such things, in the future reference in the coming session. We are going to amalgamate such things and we'll understand exactly how to sell or how to buy with these things. Okay, the things that we have learned till yet. It is always of utter importance that whatever we have understood the important price levels, it is very important you to as well understand it the same way. So if you will see that there was a major resistance level at this point, can you see this? The price was making resistance level again and again. The price started going down, but once the price started going above side, and it broke above this resistance level, the price shot up. The price shot up till this level. So this is how you're going to catch a trade. So we are going to go in detail in the next session. Okay, I hope this is very much clear to you what we are doing over here. And even if there are smaller issues, we are going to put up such issues tomorrow, and we are going to understand how we can take trades based on the same things that we have understood yesterday or till in all the sessions. And we are going to use such things in making some profits. Okay, no doubt, understand when you're trading, there will be some small losses. Okay, there will be some small losses, but it's okay. When you are doing 100 trades, when you're doing 200 trades, your winning ratio is the thing that matters. If you are winning 70% of the times, you are making a positive RR. You are making a positive return in your portfolio. So let's call it a day, people. Good night. Take care.